This breakdown will walk you through price action step by step, candle by candle, and more importantly, the thinking process behind it. Because trading the DR strategy isn't just about patterns, it's about learning to read the market like a chessboard, one move ahead, with confidence, while avoiding the traps. I want to be clear, this is a more advanced trade approach. If you're just starting with the DR basics, don't rush to trade this yet. Instead, use this video as a learning lesson of what becomes possible when you've studied and applied the DR strategy with discipline. This video does not include advanced techniques that go beyond the knowledge that I share for free on this channel. So let's begin. We're looking at Monday's price action in gold on the 22nd of September. The overnight session just closed, and right out of the gate it offered a great opportunity. Rejection of its DR highs, followed by an upside expansion. That immediately signals strength. Fast forward 1 hour, it's 9:30 a.m. The regular defining range opens, and here's where we zoom in and start analyzing candle by candle. Gold has been trending strongly to the upside for weeks. Naturally, the best setups align in that same direction. The very first 5-minute opening candle at 9:30 already gives us valuable information. The DR upside model is intact, since every session so far has respected the previous session's lows. For the regular session, we want the overnight lows to continue holding. Ideally, even the midpoint holds, because if that breaks, the upside probability decreases but not completely invalidates. 3 candles later, price trades into the overnight defining range. And here's where I want to pause. Take a moment and ask yourself, what information is this presenting? That's a little knowledge check for you, because that's how you really start mastering DR basics. The answer, all 3 sessions are already expanding. That means a range expansion model to the upside is currently in play. In such a model, especially in strong bullish momentum, the natural target is the 1 standard deviation level. That's what has been repeated multiple times now. But here's the catch. The first hour of regular trading isn't complete yet. So technically, the DR box hasn't fully formed. But we don't sit idle. With the price range tool, you can duplicate and extend the current range from the lowest to the highest 5-minute closing price so far. That gives you a projected 1 standard deviation level ahead of time, and it can only get bigger. This is where the chess analogy comes alive. Reading the board 1 step ahead, preparing your moves before the opponent plays theirs. At this point, we can add another layer of information. The overnight session left 2 volume imbalances, and both line up beautifully with the current price. Nothing below the ODR matters right now, since that's the structural point. That's already a powerful confluence. And if you're thinking, isn't this the kind of setup worth speculating on? You're absolutely right. Now the next logical question, where's your stop loss if entering here? There are 2 opportunities here. Aggressive traders might place it below the ODR mid, but that requires more advanced calculations or probabilities, which I teach in depth inside my M7DR Academy. For the DR basics approach, the textbook stop is below the overnight session low, the structural point of the DR upside model. As for targets, you don't just have the projected 1 SD. You also want to see price extend above previous session highs in an upside expansion model. With roughly 3R on the table, this is a very valid setup. A break below the ODR low would invalidate the structure, simple as that. Now watch what happens 20 minutes later. Price trades higher and closes above the opening price. That's valuable information. Even before the box has fully formed, measuring from the lowest to highest 5-minute close already gives you an adjusted 1 standard deviation projection, several points above the overnight high. Now we're looking at 3.5R potential. By 10:30 a.m., the RDR is formed. Moments later, price closes above it on a 5-minute chart, confirming longs. And notice how the overnight highs supported the move upward. Classic DR upside model behavior. What does a break above the defining range high on a 5-minute time frame tell you? Higher probability for longs throughout the session. That's right. Here's where the stats get exciting. Across the last 18 years, gold's regular DR session only turned false 12.5% of the time. That means almost 90% probability of staying inside the range or continuing higher. A quick look at all days of the week reveals that Wednesdays hold the lowest percentage with 81.2%. With that confirmation, you can ignore the overnight lows and safely trail your stop below the current RDR low. Maybe even tighten it around the ODR mid. That effectively cuts your risk in more than half while keeping the upside potential alive. If you prefer to lock in profits early, you can trail stops below valid levels, like below the ODR highs or even the open volume imbalance aligned with the range mid. Just remember, tighter trails often leave profits on the table, and most traders struggle to re-enter after being stopped out early. Eventually, price rejects the DR high multiple times before breaking through and trading into new highs and hitting the target. So what's the real takeaway here? When you understand the DR basics deeply, you're not just reacting. You're calculating, projecting, and trading with a statistical edge. It's literally like playing chess with the market. And the best part? Everything I shared today is built from the DR basics, which I continue to teach here for free. If you want to go further, where we refine models, deeper calculations, and advanced execution tactics, that's exactly what my M7DR Academy was built for. But whether you stop here or take it further, remember this. No other strategy gives you this level of statistical clarity. Master the DR basics and you'll trade with confidence that most retail traders simply don't have. I wish you a great trading week and hope to see you in the next video.
We're gonna take on the world.